Tariffs. It's the one thing that you can't escape right now. Unavoidable, it's everywhere. The big question, what's the end game? And of course, is there a method to all the madness that we're seeing right now? After all, Trump, the great disruptor, the destroyer of worlds. But there must be a logic behind the chaos, right? It's not just all madness, is it? Well, to find out, let's look at what's really going on with Trump's tariff regime, starting with the reality that this is a huge escalation. Quite simply, Trump dubbed April 2nd, when he announced his so-called reciprocal tariffs, as Liberation Day. And in terms of impact, if not sentiment, it lived up to the billing with a minimum of 10% tariffs on all countries. Many rates much higher than that, though. Vietnam was like 49%, China 34%. So he did liberate us from the gains in our portfolios. Trump claimed that he was charging half of what other countries themselves placed in the US, but there's been a big criticism, of course, of the formula used, and claims that it doesn't actually add up to what the reality is. Now, the American Enterprise Institute has calculated more accurately, much lower figures, but ultimately that doesn't really matter because those people are talking facts and reality. Trump's on a different level. Trump's figures are the numbers in play, and now we've got a major global reordering in effect while the markets reflect the escalation. The S&P 500 lost almost $6 trillion in value over 2 days at the end of last week. And if crypto looked like it had been holding up better for a few minutes, well, the market quickly disabused us of that notion with Bitcoin tumbling below $75,000, Ethereum plunged to $1,500, man, ETH. Name me a more cucked coin this cycle. Anyway, if you wanted to get an idea of how sentiment was looking, Vanguard, one of the biggest asset managers in the world, second only to BlackRock, sent an email out to clients which basically urged them not to sell. Please don't sell. Please don't sell. Our business relies on you holding our ETFs. Or as they put it, resist the urge to deviate from your financial plan. Now, as for whether this is all just part of Trump's unique approach to deal make, it's the art of the deal, baby. Well, maybe. But on the other hand, Commerce Secretary Howard Lutnick came out and said that tariffs are going ahead on April 9th. It's tomorrow, today. For those of you watching this in future land, Treasury Secretary Scott Bessent has also indicated that there is no backing down. This is the plan and they're sticking with it. They are willing to Volcker themselves, aka take that short-term pain for long-term gain. And what that all looks like, it's not some kind of short-term negotiation tactic, although deals will be made, but actually more like the beginning of a new financial order. Before we get into that, look, I know a lot of you guys are trading these cryptocurrency markets. You're long in the rips, you're short in the dips, the rejections, of which we're getting many recently. I want to take a moment to let you know how you can get $50 for free with Femex, one of the top crypto exchanges. Look, markets go up, markets go down, but you can trade both ways and make money both ways. Even if it feels a bit dirty making money shorting sometimes. And the OG exchange, Femex, is a great place to do it. It's available to everyone, everywhere. It has deep liquidity, all the top trading pairs, and currently they're running a crazy promotion that you may want to take advantage of. So you get $50 for free just for signing up using the link down below. You'll get a 20% deposit bonus. So you deposit $1,000, get $200 back, as well as a $1,000 trading bonus. Pretty damn cool, right? All you have to do, use the link down below to start your account and you'll be eligible for all of those bonuses. Go check it out if you're a trader and you want to be trading in the markets and taking advantage of that offer, but also of all the trading opportunities available. Let's talk about this, the beginning of a process. Those are the exact words that Scott Bessent used in a recent interview. He said, this is the beginning of a process and that we are going to re-industrialize. He talks about making things, about economic security. And here's a key point for you. He also says, Wall Street has done great. It can continue doing well, but it's Main Street's turn. Sounds pretty clear. The priority right now is not to pump anyone's stock portfolio. That'll come later, but as underlined by Bessent, also explaining that the top 10% of Americans own 88% of equities, while the bottom 50% are in debt. It's a broken system. You can't have long-term massive financial success for an entire economy with those kind of numbers. He went on to say it's time to give that bottom 50% some relief. And here's an interesting detail. If you were in any doubt as to the scale of what might be unfolding, go back to June 2024. And Bessent said this at the Manhattan Institute. He said, I could see in the next few years that we are going to have some kind of grand global economic reordering, something the equivalent of a new Bretton Woods moment, which was a massive reorganization of everything, in case you don't know. Or if you want to go back, like the steel agreements or the Treaty of Versailles. So it looks like these guys are deadly serious about not being worried about the stock markets and wanting to have a massive global reordering of trade centered around America. By the way, it's not only the stock market that went down last week, oil prices did too, so did interest rates. According to Percent, these are the things that impact working Americans much more than stock prices. But as we're looking at the bigger picture, well, let's check some historical comparisons. This is the biggest imposition of tariffs since the Great Depression. I know, this is the worst since the Great Depression. Anyway, so we're talking about a once-in-a-century kind of upheaval here in the global trade order. But that doesn't have to mean another Great Depression is on the way, right? Because there are some major differences now. First, unlike in the 1930s, the Federal Reserve now is prepared to step in and print. Second, we don't have currencies tied to the gold standard anymore. Third, the United States now operates the world reserve currency and is really the sole superpower. I mean, we could argue China's a secondary superpower in this situation, maybe the EU, but really it's still America's world at the end of the day. They have the reserve currency, and of course Trump is pro-growth, and fourth, tariffs imposed back in the 1930s were super protectionist and the whole world followed suit, whereas right now it's very much the opposite situation. The world is scrambling to prevent escalation because everybody wants access to US markets in the richest damn country in the world. US is 1/3 of global consumption. Essentially then, it's a very different global order right now. And while history is a good teacher and we should learn the lessons of history, it doesn't make sense to expect an exact repeat of the 1930s. Plus, we should also take into account Trump's agenda and his legacy. And by the way, the Great Depression was already underway when those tariffs came in. Shit was already cooked for a variety of reasons. Now, Trump may not be prioritizing the markets, but when it comes down to it, he can't screw them up for too long either, or too badly either. Okay? His agenda, his legacy, everything gets derailed if he causes a new Great Depression or a giant global recession without actually pulling any of this shit off. After all, turmoil is fuel for his political opponents, and there are midterm elections to consider coming up in 18 short months. This is something touched on by ARK Invest founder CEO Cathie Wood, who said we're in the eye of the storm right now, but Trump cares about his legacy, he cares about the midterms, and that the Trump team and Fed have many degrees of freedom to pivot toward pro-growth policies. And all the stuff they want to pull off for the bottom half of the country doesn't work if they cause a giant recession, Great Depression. Businesses aren't going to be hiring anybody then, are they? Also, what's unfolding is more than just an unorthodox negotiation. The fact remains that nations are jockeying for position and have made super clear that they want to work out deals. Most countries want deals. The EU bloc, they're negotiating hard because they have more power to negotiate hard. They have some cards, but they're going to negotiate. Taiwan's negotiating, Israel's negotiating, India's negotiating, Cambodia, Vietnam, others, okay? But not China. China is playing hardball, okay? Signs of easing trade relations, though, would spark relief in markets, but still, there are indications of deep realignment still to come, and a lot of headline risk remains. Now, this was emphasized by veteran investor Howard Marks, who said in a Bloomberg interview that what's occurring is probably the biggest change of his entire career, as it's a shift away from globalization and free trade, and a major shakeup of the total global world order. And surprisingly, British Prime Minister Keir Starmer, who's usually disparaged by his critics as a WEF puppet, also came out and stated that the world has changed. Globalization is over and we are now in a new era. Might he say, the new world order is here? I see you, Keir. Anyway, so you can now see the implications are very, very profound. Old anchors, old patterns, mean revisions may not be as reliable as you'd like them to be, but this also means big opportunities will emerge, bigger than you can possibly imagine, as always. Downside volatility, downside risk remains. Headline risk is severe right now, but that downside volatility can be a welcome gift to investors who still have the ability to invest and have the patience to think for the long term and have a plan about how to build their long-term wealth in uncertain times. Thanks for watching.